or anything, but just doing a side investment, just here and there. But nowadays it's been tough this year, 2022. Just everybody getting wiped out basically left and right. It's been a very challenging year. Uh, um, so hopefully, better times are ahead.
How do you see the market for, especially when we talk about market? We're going to first talk about stocks, and then we'll jump into real estate later on in the show. But what do you see for 2022? Is it going to be very volatile for the stock market, or do you think there's going to be a point somewhere at the end of the year where it's going to stabilize?
It's the thing with stock market is like nobody really knows, right? You know what's going to happen tomorrow. Nobody has any clue. None of them, not even the Federal Reserve, have any idea what will happen. But here is my opinion. I think what's gonna happen is basically we're not gonna go anywhere. It's just gonna uh, just stay in a range, basically. It's not
Just,
gonna go up or it's not gonna go down that much. I mean, it's already been down like 25% now. S&P 500 is already down 25%, and Nasdaq is down like 30% from all-time highs. The Federal Reserve has been raising interest rates, so that kind of puts a cap on the equity market. So once Fed stops raising the interest rates, and that's when I think we might see some upside in the market. But until then, we're just gonna have this choppy sideways or just go down a little bit more.
tech stocks have taken a beating. Some of those tech stocks have been down 50%, probably 60%. Do you see more trouble for tech stocks, or do you see them stabilizing anytime soon?
If you are someone, yeah, like a passive investor, I wouldn't put money any in tech stocks, none, because we are in a rising rate environment, and that is not good for the tech stocks because most of these tech companies they cannot make money. They depend on the loan or the government to get the money, so they will have to be paying higher interest. So they're not going to make any money. So the companies that won't make money, they're not going to survive unless they can make money and start to earn revenue and
That,
make
that,
profits.
that's a good point. They need to show earnings.
Yeah. See, 2020, 2021 was the easy money. Even people, companies like literally nothing. They just opened a company. They were like 10 billion, 20 billion market cap. So that's not going to happen uh, rest of the year. But if I were someone new, I would just put in S&P 500. Just keep buying S&P 500. It gives you dividend, you make money, and you don't have to worry about it.
No, that's great advice. That's what I was going to come to.
Yeah.
Because I was just looking at some of my friends. Most of them, I mean, they're not doing bad because obviously they have jobs and it's providing them income and stuff. But from an investment standpoint, most of them feel stuck because they put money in something and it's not there where they can sell it. So from that standpoint, uh, they just feel stuck. Most of them, at least that I know.
Right.
Um,
The problem is, like we hear about these companies, like someone tells you, like one of your friends, hey, this company is good, just put money in it. So you just go ahead and randomly buy these stocks. And then the guy who advised you basically probably gave whatever advice he wanted to give. But the problem is, like, people don't know when to get out. Everyone can get in. Getting in is very easy. Getting out is the very difficult part. You need to know when to get out and just stay out of it. Otherwise, it's gonna be really problem for your investment career. Or
that's a great point there. Yeah, I was going to ask you if somebody has never done any sort of investments in stocks, where do they start? And I know you said something along the lines of buying S&P and then just putting money in S&P and holding it there for a while.
that's right. Yeah, if you put $1,000 every month in S&P 500, after 40 years, I think there is a math basically that you will have like some five 5 to 6 million dollars basically just doing that.
Wow.
So there is
Magic.
no magic or anything. It's
No magic, no strategy. Just keep putting it in there.
just keep putting it in. You will have your like $4 to $5 million basically after 30 to 40 years.
So if
So
it
that's
was
one
so
thing.
easy, so if it was so
Yeah,
easy, then why don't people put it in? I mean, everybody
because
has money. It's
people
discipline,
people
right?
because people like exciting things to happen when they are doing this investment. They want the excitement. So a lot of people are in for this excitement. So nobody's in for the long haul or a long run. So
That's a
with
fantastic point. That's a fantastic
yeah,
point because
yeah,
the world that we live in
yeah,
is a very glittery world, right? Because it
right.
you get um, you really, when you see outside, you feel like everybody's doing really well and killing it, but that's really not the case.
Yeah, I know. Yeah. Someone told me that your investment has to be like kind of a boring. Like you don't want to be it exciting. Just do it and keep working at it. So um, you don't try to what I'm trying to say is like um,
You don't try to think too much, just keep putting it in, and I
just
guess,
yeah, you will see the fruits in the long run.
yeah, don't
Uh,
don't think about the result too often, right?
yeah. You want to be a long term guy,
Yeah,
but on the flip side, if you want to do like short term trading or anything like that, you it is a good choice, and you can do it. It was gonna take quite a number of years. It's gonna take how hard you're gonna work, how many times you're gonna get up, and whenever you fall and keep doing it. Um, but it can be done too, like short term. There are so many people out there who are trying to time the market and earn great returns month in and month out. It's
awesome.
definitely doable.
Is there anything else that a young person that, in your opinion, should do other than just investing in stock market? I know this S&P thing is always it does always hold true, regardless of the market situation, right?
Right, right. It will. I mean, you can see like last 60, 70 years, there's been bear market, but they have been only for like couple of years or maybe 3 years at the max. But then it goes up in a long run. So S&P 500 is like 500 American tech companies, basically not tech companies, sorry, American companies, top 500, and you're basically betting on America. I mean, even Warren Buffett says all the guys like should just invest in S&P 500 and don't try to
Beat the
do
market.
anything else. Yeah, don't try to beat the market. And all the hedge fund guys, they haven't, most of them couldn't beat the market in the long run. So
So
S&P
what's
500
the
is first
I,
way.
I guess you've been doing stocks for a while, and what's the biggest mistake that you feel that you've made while trading?
No, I've been, to be honest with you, I started some sort of investments and trading in 2017 or late 2017 when Bitcoin was like $19,000. So that's when I started. Uh, Mistakes I've done is so many. Like there was one coin, I don't remember that coin name. I was so excited about that coin. I got up at 4 a.m. and I put in $5,000. Within half an hour, it became $1,000.
Wow.
Yeah. So after that, I did put another $5,000 in an oil company. I thought, okay, oil's been down a lot. I think it was in like 2016 or probably early 2016 or 17. I don't remember, but so I put 5,000. I think the company name was Penn Virginia. The company was down like 80%, 90%. I thought, come on, it's been down so much, 80, 90%. It cannot go down more from here. So I put in $5,000. Within 6 months, that company went to zero. The stock became $0. So don't think you how low it can go. Basically, it can go to zero. Your doesn't matter whether you put 5,000 or 20,000. Your
Yeah,
investment can go to zero. That's how.
2008 is the same exact thing happened in 2008 for me. Everybody started investing in oil right before the oil went down.
Okay.
There was a company called Jared Oil Company,
Uh-huh.
Jared Oil Corporation, or something like that.
Yeah.
I invested a bunch of money there, and it became
Uh-huh.
zero. One fine day,
Wow.
yeah, one fine
Yeah.
day, I opened my account, and
Yeah.
it didn't even say zero. It just said just a line like that. And then
Oh
after
man.
after a month or
Yeah.
two, the
Yeah.
whole thing got disappeared. The whole
Yeah.
line item got disappeared.
Yeah. 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 I even have a couple of stocks in my portfolio. They're gone, but they still are showing up in my portfolio. So it's how bad it is. After that, I just started doing a little bit better, strategies and better routines, so that I don't lose my money.
But
At
you're
least.
basically doing you don't hold for a while, right? Do you have a portfolio where you hold 50% of the portfolio for a while and then 50% you play around daily? Is that how you do it, or?
Yeah, I have. So right now I have like 4 or 5 different accounts. So I think one or two accounts I hold those for like long term. Basically, I like the companies which are good, and then I just keep putting money in those. So that goes in a, like long term portfolio. And then on the other account, it's like short term one. I don't hold more than like few days, maybe a week at the maximum.
So how
So I
did
try
you
to play around with
how did you
those.
learn when to get rid of a stock? Is that an art, or is that a gut feel, or you research the market, or how does one know when to sell it?
It is all it's how much risk you want to take, how much risk you want to lose your money. So basically, suppose for an example, if you buy Tesla, say at $700, and you put in, I bought 100 shares at 700, so that's 70K. And say if your risk tolerance is only like $5,000, hey, I don't want to lose more than 5,000 on it. So basically, you gotta get out when the stock goes below 650. You just get out and you say you're done. I'm not gonna buy it again, or just or get back in again when it kind of sets up, like, or when the trend is goes back. So I mean, there's things basically like people do technical analysis and some other levels and all that stuff. People do that. Basically, when I get out is when I see that it's not working the way I thought it's gonna work. That's the first step. Second step is like the dollar amount. This is the dollar amount I'm gonna lose or risk on it. If I lose that dollar amount, I'm gonna get out. Doesn't matter if it comes back up again. Hey man, you should have held it. It came back up. Yeah, that's not the way I planned it. It didn't work it like the way I was thinking. So those couple of things, or when the overall market is really bearish, like nowadays, basically, market is just going down every single day. It just goes red, red, red. These times, I just stay on the sideline. I don't do anything at all.
Just
I mean,
observe and learn.
just absorb and learn, or say instead of buying 100 shares, I might just buy like 20 shares or 30 shares, and then just
Maybe do some dollar cost averaging or something like that.
yeah, yeah, yeah. Do dollar cost averaging and just be in touch with the market and just try to learn, because tough times create great men. Easy
Yeah.
times create weak men. So you gotta be on the tough side so that you can become great.
It almost seems like to me when I look at multiple people, everybody works. Most people work at a company, and within that company or maybe where they live, there's a community, and they have a group, and most of the ideas come from a group. And it almost seems like to me whenever I step out of the house, almost everyone is an expert in stocks. How true does that hold?
I would say, uh, I mean, it's hard to say how much the other knowledge or the other guy is having the knowledge. But in general, retail people have no idea, absolutely no idea. They don't have any clue what's really going on. Like some people say, hey, the inflation it keeps going up. Some people just say, hey, Fed is raising the rates. Yeah, those are all true, but in the background, there's something really big is cooking, and we people are probably the last ones to know. I think there are like
Yeah,
institution, the hedge fund. Those are the guys who get all the information much before than we receive.
absolutely. Yeah,
So I just look at the price and then I just play. I don't care about what's going on. Whether I really don't really look at
no, I think that's a
the
good way.
news.
That's a good way
Yeah,
to do it. I
yeah,
think I feel like a lot of people, with these groups and stuff. I mean, it gives you
yeah,
some knowledge to an
yeah,
extent, but I
yeah,
think that people get kind of like pressurized into buying those stocks, more like a peer
yeah.
pressure than anything else.
Yeah, because what the thing is with general people is like they want to know, hey, like suppose on Friday or Thursday market fell, people want to know why it fell. Like they're always looking for a reason why it fell, or when it went up, hey, why did it go? Like what is the reason? To be honest, if you try to look for those answers, you're never gonna go and ride the wave. Basically, you just keep looking for the answers, or the why it happened
Yeah.
rather than searching for the why. Just focus on just trading or investing, or just do that and worry about why is it happening,
Yeah.
because worrying about it will not gonna take you anywhere.
No, great points. Great points.
How about you? How was your investment? You were a big player, man. I just started 2017, 2018. You've been doing it for quite a while. I know you were a big gun. So how
No,
about
no.
you?
No, I really enjoy trading stocks and stuff, but I'm more or less a long-term player. So I
Hmm.
just, I just buy and hold it for many, many years. Um, including this year, a lot of people have lost money, but I have made money in stocks this year. It is
Nice.
it is only because I've been holding it for a while, and there's not. I mean, I can see the positives on both sides, holding it for a while and then also doing something on a day-to-day basis for cash flow, because for some people, that gives them cash flow. And for me, I don't really have enough knowledge to be able to trade every day like that. So so if I don't have that kind of knowledge to trade every day, then I feel like the best way for me to do is to pick some winners and then ride them for 3 4 5 years sometimes. I've had success doing that, and and then the rest of the time I just try and play the real estate game. For me, I feel like the a good percentage should be, maybe, off your portfolio, 25% should be in stocks, and then the 75% should be in real estate off your portfolio. um, and the only reason I say 75% for real estate is because if you think about it, real estate, when you buy real estate, you use debt. Stocks, you don't use debt for the most part.
Right.
So
Right.
that's why it's real estate. You can have a big chunk of your portfolio in real estate because that big chunk involves debt, right?
Hmm.
So if
Hmm.
if you if you remove that debt, then you're almost there, 50-50 stocks in real estate. But if you have debt, then that portfolio becomes bigger. So obviously, real estate portfolio will be more of your
Hmm.
total percentage.
Okay.
I would say
Okay.
set 25-75 is something that I shoot for. 25%
Yeah.
of my portfolio
Yeah.
stocks and 75 real estate. Only 75% is real estate, only because real estate is leveraged.
Hmm. Right. Yeah. Yeah. You were controlling like say 500,000 home with 20% down payment.
Exactly.
and you're making your monthly payments basically. So yeah, that's a big leverage you're doing. Um, yeah. So any what's the advice you want to give for say someone who is graduating now and who wants to buy a house in this environment? What is your advice for someone who is just starting out?
I mean, I would say the same thing as you did. Is I would just open like a Fidelity or Vanguard and start throwing money into the S&P. It could be their S&P too. They have the S&P of their, their individual S&P.
Yeah.
Probably
Vanguard ETF,
yeah,
Vanguard
Vanguard
ETF.
ETFs. Yeah, probably it
Yeah,
has less fees and stuff like that.
yeah, yeah.
But I would say do that for the first, few years, right? Before you even think about buying a house. Right now, buying a house would be kind of dumb,
Hmm.
because the
Yeah,
market is so high right now,
right, right.
and even if you try and rent it, it's not going to cash flow.
Hmm.
So it's going to be a negative cash flow if you buy a house now for investment purposes. Now,
Okay.
now there is a way to buy homes. You just got to know people around you.
Hmm.
If you buy a house 30% of its actual value, maybe you buy it wholesale, or maybe you know somebody that's selling for cheap and you need some work done to it. Then I would say that go ahead and buy that, right? But if you're buying retail, then unless you're living there, you're not going to get you're not going to get into a good investment there like that. But even then, I would say that if I were 21 years old and I was starting a job,
Hmm.
buying real estate at 21 years old um, is not a very good idea in my opinion. The reason for that is because once you buy a house, then you got all these expenses that go with it, right? You
Hmm.
got
Yeah.
mortgage, you got property taxes, you got maintenance, you got HOA
Hmm.
fees, and you got utilities that you need to pay, right? So
Right.
at 21, 22, 23, 24 years, however old you are, you got all these expenses already that are, that have just started coming in, right?
Hmm.
So how are you paying those expenses? Then you have to work, you have to trade time at a corporation. You have to trade your physical time at a corporation to make money, and then you're paying off
Yeah.
and then you're paying off your expenses.
Yeah.
I would say
Yeah.
that's almost like a terrible way of growing, because
Okay.
you never want to trade your time for money.
Hmm.
Eventually, you have to figure out how you're going to get away from trading time for money, because if you trade your time for money, you're never going to get super wealthy.
Yeah.
you know Apple doesn't trade time for money, they trade their product,
Right.
right?
Yeah.
Look at
Yeah.
all the big guys. Warren Buffett, he doesn't
Hmm.
trade time for money, right?
Hmm.
No, all the successful guys, they don't trade time for money. But when we
Hmm.
go and work at a corporation, that's exactly what a corporation wants. Corporation wants us to trade time for money because they want to
Yeah.
keep you there for the rest of your life.
Right. Yeah.
It's good for them because they have a body and the work's getting done, right?
Yeah.
um, but
Hmm.
for you, the moment you buy the home at 21 years old,
Hmm.
that's a trap. That's right there is a trap.
Yeah.
The reason
Well,
for the trap is, how is the homes getting paid? I mean, you're actually trading time for money, and then you're taking that money and paying expenses. It's good, the equity is going up, no big deal, you're getting slowly wealthier. But think about it, right? I mean, if you're nimble, and if you don't have any baggage at 21 years old, and if you dive deep into it with that same 20% that you put it into the house, throw it in stocks, throw it in S&P, or throw it in stocks, take a big risk and grow that money, and then at maybe at 30 years old, you have this big pot of money. You don't have any home, your rent is less, you don't have any expenses, but you got a big pot of money because you've been investing since 21 years old, continuously
hmm.
investing. At 30 years old, when you are, that's about 10 years worth of investing. And if you invest well, that could be close to 700-800 grand,
Hmm.
for a
Hmm.
good software engineer type person,
Hmm.
right?
Hmm. Yeah.
That's a significant chunk of money where, at that point, let's say if you're still single, I would say that you were, you have a lot of options at that point. In that 10 years, 9, 10 years, you have built your skill to a point where you can just leave that job and you can at least create enough income from real estate where it'll cover your expenses. And then that's it. And then your time is free. You're not trading time for money. You can go do something and or scale something, or maybe still if you're invested in real estate, you can still do real estate. Um, See the game there. But
Yeah.
if you already
Yeah.
just bought it at 21 years old, by the time you're 30 years old, it's a 30-year loan. You're not going to pay much in 10 years on a 30-year mortgage.
Yeah.
The
Yeah.
home may
No,
appreciate,
great point.
yeah, but right now the home may appreciate maybe 100 grand in the next 10 years. So, but what will you do with 100 grand? Because
Yeah.
you've been cutting grass and mowing and all that stuff. The skill that you were supposed to build, you didn't build,
Yeah.
right?
Yeah. Yeah.
Because
Yeah.
you were
It's
trying
yeah.
to do your media room or trying to clean the carpets or
Great point. Yeah.
at
Great point.
21 years old, you shouldn't be doing all that stuff. You should be
Oh,
focusing
yeah.
on
Yeah.
how to hammer down, how to build a
Yeah.
skill.
Yeah. So would you advise that 21, 22-year guy to maybe buy a rental property or some kind of other property rather than his own home?
The best way to do it is to house hack.
House hack. What is that?
House hack is it takes a little bit of work,
Hmm.
but if the guy really wants to buy a property, then Bigger Pockets talks about this. Um, Basically, you buy like a duplex or maybe a triplex or maybe a
Hmm.
quad,
Hmm.
and you basically live in one section of the house, one portion of the house, and then the other
Hmm.
2 or 3 units you just rent it.
I
So
see.
what happens then is all the expenses that are related to the house are covered by the income that comes from rents.
Okay.
And then essentially your whatever you're earning from your day job is not going towards the expenses of the house, of the property.
Yeah. Yeah.
But the moment you earn money from your day job and start to pay mortgage and all that stuff, that's where it's going wrong for for majority of the people,
Mm.
because it will take you 30 years. In fact, I'm completely wrong, because most people after 10 years they do a refinance and the clock sets back to another 30 years. So
Yeah.
when will you pay it?
Yeah.
Right? I mean, it will take you 40 years or more to pay off a house. By
Yeah.
that time you'll be 65. Why do you need
Yeah.
money at 65?
Yeah.
I need the money now in the 30s and 40s
Yeah.
and 50s,
Yeah.
not when
Yeah.
I'm 65, 70. Of course,
Yeah.
if you're working all your life, uh, obviously you'll have, I'm hoping that you're managing your money well enough to have a decent lifestyle after 65. But I don't want to plan after 65. I want to live my life now. I want to be able to do things now. I want to be able to, also the money thing, it gives you enough confidence to go out and be you, be yourself, right? But if you're not, if you didn't do all that stuff there in the 20s, then it's not going to give you confidence to be yourself. You always will have to say yes, yes, yes to what most people are saying. you
Yeah.
you won't be able to think by yourself there.
Right. Right. Right.
I would say that would be my
I
advice.
I think if whoever the viewers are gonna listen to this one, I think this is a very great piece of advice or great points. Like for 22, 23 guy to for plan it accordingly and do the right moves.
Yeah, because
Uh,
if you think about it, 20s is all about building skill.
yeah,
I mean,
lot of people waste time though in
a lot
20s.
of
They
people
don't
waste
do
time.
anything. They
Yeah,
will realize it once they are like in 30s, like 30,
exactly.
31, 32. That's when they realize, oh man,
Is getting away from you by that time.
yeah, yeah, it's slowly getting away. You can
Yeah,
still catch it. You
you
can
can still
still
catch it.
catch the train,
But I
but
mean, people are now realizing in 40s.
yeah,
I have personally interviewed so many people that are in 40s, and they still say that that's their regret, is they didn't pay attention while they were in their 20s.
yeah,
Yeah, because 20s is all about following the fundamentals, working
mhm,
super hard. The only reason why you work super hard is to basically be disciplined enough to learn those skills that are needed for the rest of your life. That's when a, a person is made in their 20s.
Mhm.
They're not made in their teens, they're not made in their 30s or 40s. A person's life is made in their 20s because that's
20s.
when you're
Yeah.
absorbing everything.
Yeah. Yeah.
and
Yeah.
w- and the 30s is all
You
about
know, you know
30s
what
is
I
all about
did?
conversion.
Yeah, I did play basketball and golf. That's
Yeah,
all I did
in 20s.
in 20s. Yeah.
No, I mean, it's good. I mean, sport is good because
Yeah.
it gives you a perspective, right?
Yeah.
But third, you see, after you do all this stuff in the 20s, 30s is all about execution. 30s is all
Okay.
about waiting for your time, because it is so sensitive that you don't want to take a leap 1 year before nor 1 year after. There's a time that tells you that, hey man, this is the time here. If you miss this boat,
Yeah.
you're
Right.
you're never going
Yeah.
to do it. So
Yeah, but one thing though, I think people who are in 20s now, they
uh-huh.
won't realize it though. They
No,
will not know this at all. They
no,
won't know like, hey, I
that's
gotta
right.
do this, because back then or in 20s, they were just thinking, hey, man, which bar I'm gonna go, which club I'm gonna go,
Mhm. Yeah,
or I have to go to that city,
yeah. No,
or I
I
gotta
agree.
play video games, or things like that. That's the mentality in the 20s, but I don't know.
You're 100% right. You're 100%
Yeah.
right. But a guy can actually do all those things and be very effective.
Okay.
I mean, I'm saying effective, not efficient. If you can be efficient too, but
Yeah.
a guy, there's a difference between efficient and effective, right? A guy can be very effective by doing all those things also. And people should have fun. I mean, I'm not against people having fun,
Yeah.
but at the same time, they need to be, if they want to. Now, if you don't have the motivation, and if you just want to, earn a paycheck and watch TV, eat and sleep, more power to you. I mean, I'm happy for you. I'm jealous that you're just watching TV, because I'm not. I'm working hard, you know. but so super happy for you, because I wish I could think that way, but I can't. I'm just pushing every day. But I'm jealous that you're able to do that. I'm not able to do that. But at the same time, I'm so happy for you that your mind and conscience are telling you to just sit there and watch TV and go work next day, and then just sit there and watch TV again. but uh, uh, but if you're my type, all this stuff applies to people that are in my category, who
Okay.
want to, and your category probably, that want to get somewhere, right?
Well, I'm the one. I think I realized my, this investment, or not investment, like doing something better, or uh, you know these things basically, when I was in like basically 30s, 30, 31, 32. So that's when I started doing some of the better thought process and better thinking, I would say. But yeah, even I regret actually thinking about it now. Like, basically in financial crisis 2008, I took my 401k money out.
I know, I
Would
know.
you believe that?
I told you,
Yeah.
I told you, don't
uh,
take it out.
Yeah, yeah. See, you need to have a good group, I think, around. Like, I was in the wrong group, basically. Hey, man,
Yeah.
falling down, take
No,
the
I told
shit
I told
out.
you so many times. I told you, hey, why
Yeah.
are you taking it out? You're making a
Yeah.
mistake.
So I made a big mistake. Well, so then the money I
But
got was
yeah,
one not much, but then
yeah.
I put it
You
and bought
invested
a
somewhere
land.
else. Yeah,
I bought a land in India.
and it was okay
That's
for
all I
you.
did. It was okay, but I think I would have been much okay. Or I, looking at it today, I think leaving the money in there would have been a much better choice.
I
That's what
see.
I
I see.
think. Yeah.
No, I mean, these are
So
good lessons learned, though.
yeah, yeah,
Good lessons learned.
yeah. I think with the stock market, you got to buy when it is red. You
Yeah,
don't buy when it is green.
I agree.
So
I agree.
one question for you: if what's the biggest mistake you have made in, like, say, real estate? I mean, yeah, what's
Yeah.
the
So real
biggest?
estate, there was a apartment complex. It was a 32 unit apartment complex that
Uh huh.
we set out to buy, and
Mm-hmm.
we had our LOI approved. letter of intent, and we were, we had our PSA signed and everything, and officially we were under contract. Now,
Okay.
okay. Now after, when we were under contract, or before we were under contract, what we should have done is we should have given that PSA to a lawyer, to an attorney, and have them review it before we signed it, which we didn't do. And our broker, who was representing us, was also not really that experienced guy. So he didn't really give us a good advice on how that works. And at that point, we were just getting into medium-sized apartment buildings, so we didn't really have much idea there. Um, so we went into the contract. PSA was signed. Due diligence period started. We went through the due diligence. Um, the uh, um, the guy that was doing the mortgage, they started doing the lending, the financing, and then in the middle, the property wasn't cash flowing properly. Like how they said it was cash flowing when they actually gave us the financials before we gave an offer.
Hmm.
So the financing people, they took a look at it, um, and they ran their numbers. We went back and forth for a while. The lender were asking information that we weren't getting from the sellers.
Okay.
And in the meantime, uh, one fine day, the lender said that, hey, this property is not performing like we intended. We can't,
Mhm.
we can't do financing, even though
Oh
we were
wow.
approved for financing.
Oh wow.
Even
Okay.
though there was a pre-approval on it before we
Okay.
gave an offer.
Okay. Okay.
But it was just the property wasn't performing like they thought it was performing based on the
Oh.
financials that
Oh.
they provided before.
Oh wow. Okay. So
Um,
did you guys lose money on it?
we lost,
Some money?
about, I would say we lost close to 75K earnest money,
Oh. Oh wow.
$75,000. Yeah.
Oh wow.
So I lost that much money,
Mm.
in earnest money, if I remember
Mm.
correctly. Yeah.
Mm.
Um, so that was the biggest mistake that,
Mm.
we didn't know how to cover ourselves.
Mm.
But again, I mean, that was a great lesson learned. I know losing money is a big thing, but
Mhm.
I mean, it wasn't, right now when I look back, it wasn't a regret or anything, because
Mhm.
I understand now that that was something that needed to happen to us.
Mhm.
Um, and then from there on, we had bought big apartment complexes. So I would say that was the biggest mistake that we have made in real estate, is not to understand the terms of what we're getting into. Because the lawyer
Okay.
could have said, hey, look, if the financing doesn't go through, then this contract is null and void, and the earnest money should come back at that
Oh
time.
wow. Oh
Now,
wow.
I mean,
Yeah.
now that may not happen now.
Yeah.
Sometimes you just have to close it. I mean, it just depends on how you negotiate it.
Right. Right.
Um,
Okay.
but I would say
Awesome.
that at that time, I would say we could have got the earnest money. Now, market has changed from that point again,
Mhm.
and people are going hard on the earnest money on day one. So
Mm. Wow.
yeah, so you got to figure it
Nice. 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 Nice.
out. Yeah, awesome, man. I mean, this was a
Yeah.
great discussion today. So I
Yeah.
really appreciate
Yeah.
you coming online to have
Yeah.
this
No,
conversation.
appreciate your time as well. I mean, thank you for making this podcast.
Awesome. And then we'll
Yeah.
touch base in the next few weeks again, and we'll make another one.
Yeah.
You
Yeah.
take care
Sounds
and
good.
have a
Yeah.
great,
Yeah.
great weekend.
Yeah. Enjoy your weekend too.
Awesome. Thank you.
Bye.
Bye.
Bye.